Today, we will discuss the interaction of estate and gift tax exemptions. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the firm Cummings and Cummings Law. I also teach business law at Florida Gulf Coast University and hold 4 degrees, including 2 law degrees, and a variety of tax, financial, and accounting credentials, which I apply for the benefit of my clients in my law practice. Our firm website is www.cummings.law, not .com, but .law. The intersection of estate and gift tax exemptions is a complex area of tax law that requires careful consideration and planning. These exemptions are critical tools in managing wealth transfer, yet they are often misunderstood by individuals who lack this specialized knowledge. This misunderstanding can lead to costly mistakes. Therefore, it is imperative to consult with an experienced attorney and CPA to navigate these waters effectively. Estate and gift tax exemptions are designed to allow individuals to transfer a certain amount of wealth without incurring tax liabilities. However, the rules governing these exemptions are intricate, and the interplay between them can significantly impact an individual's estate planning strategy. Understanding these nuances and contours is essential for anyone seeking to preserve their wealth for future generations. Estate tax exemptions refer to the amount of an individual's estate that can be lawfully transferred to heirs without incurring federal estate taxes, also sometimes referred to as death or inheritance taxes. As of recent years, the exemption amount has been substantial, although many estates are able to avoid federal estate taxation altogether by maximizing the use of these exemptions and through the implementation of other effective estate tax planning strategies. However, these exemption amounts are subject to change due to legislative actions, as we just saw with the enactment of the so-called One Big Beautiful Bill Act, or OBBBA, making it crucial for individuals to stay informed. One common misconception is that estate tax exemptions apply universally without any need for strategic planning. In reality, the application of these exemptions can be influenced by various factors, including the structure of an estate as well as the number and nature of any trusts that are in play. An attorney and CPA working together can provide invaluable guidance in structuring an estate plan that maximizes the use of available exemptions during a taxpayer's lifetime, thereby minimizing tax liabilities. Gift tax exemptions allow individuals to transfer a certain amount of wealth to others every year without incurring gift taxes. These transfers may be of property or cash, or a combination of the two. This annual exclusion is separate and apart and distinct from the lifetime estate and gift tax exemption, providing an additional layer of complexity. The annual exclusion amount is indexed for inflation, meaning that it can and will change over time, further complicating planning efforts. Many individuals mistakenly believe that gift tax exemptions are straightforward and do not require professional oversight. However, the rules surrounding these exemptions are nuanced, and improper use can lead to unintended tax consequences. For example, gifts that exceed the annual exclusion amount may require the filing of a gift tax return, even if no tax is ultimately due, as is often the case. An attorney and CPA can help ensure compliance with these complex rules and optimize gift-giving strategies. The so-called unified credit is a critical pillar of the estate and gift tax system, allowing individuals to apply a single credit amount against both estate and gift taxes that would otherwise be due. This unified approach means that the use of one exemption can and will impact the availability of the other. For instance, large lifetime gifts can reduce the amount available for estate tax exemptions, underscoring the need for careful planning. Understanding the unified credit system requires a deep knowledge of both estate and gift tax laws. Many individuals are unaware of how their lifetime giving decisions can affect their estate tax liabilities upon their passing. An attorney and CPA can provide clarity on this issue, helping individuals make informed decisions that align with their long-term financial goals. Maximizing estate and gift tax exemptions involves a combination of strategic planning and timely execution. One effective strategy is the use of trusts, which can help manage the distribution of assets and leverage exemptions more effectively. Trusts can also provide additional benefits, such as asset protection and control over the timing of distributions. Of course, every trust is different, and these are just general illustrations of what can be accomplished when certain trusts are used correctly and when they are designed, drafted, and implemented by a competent attorney. Another strategy involves making annual gifts up to the exclusion amount, thereby reducing the size of the taxable estate over a period of time. However, these strategies require nuanced coordination to ensure compliance with tax laws and to avoid unintended consequences. An attorney and CPA can offer tailored advice, taking into account an individual's unique circumstances and objectives. One of the most common misconceptions about estate and gift tax exemptions is that they are static and do not require ongoing management. In reality, changes in tax laws, treasury regulations, and case law, as well as personal circumstances, can necessitate adjustments to an estate plan. Failing to revisit and revise an estate plan can result in missed opportunities and increased tax liabilities. Another pitfall is the assumption that all gifts are tax-free, which is simply not the case. While the annual exclusion allows for tax-free gifts up to a certain amount, gifts exceeding this threshold can have tax implications. Additionally, some individuals overlook the importance of proper documentation and reporting, which can lead to compliance issues, which we would all like to avoid. Engaging an attorney and CPA can help avoid these pitfalls and can help to ensure a comprehensive approach to estate and gift tax planning. The contours of estate and gift tax exemptions underscore the importance of professional guidance. An attorney and CPA can provide a holistic approach to wealth transfer, considering both the legal and tax implications as well as the pragmatic implications of various strategies. This expertise is indispensable in navigating the ever-changing landscape of tax laws and assuring that an individual's estate plan remains effective over time. Professional guidance is not only about compliance, but also about optimizing outcomes. By working with a professional experienced in this niche area of law, individuals can explore advanced planning techniques such as charitable giving and family-limited partnerships, as I've covered in some of my other videos, to enhance their estate planning efforts. Ultimately, the goal, or I should say the goal of most people, is to preserve wealth for future generations while minimizing tax burdens, which is a task that is best accomplished with expert assistance. The interaction and intersection of estate and gift tax exemptions is a multifaceted area of law that demands careful consideration and strategic planning. Misunderstandings and misconceptions can lead to costly mistakes, further highlighting the need for professional guidance. An attorney and CPA can provide the expertise necessary to navigate these complexities, ensuring that individuals maximize their available exemptions and achieve their wealth transfer goals. By staying informed and proactive, individuals can effectively manage their estate and gift tax obligations, thereby preserving their legacy for future generations. Again, my name is Chad Cummings of the firm Cummings and Cummings Law, and it was a privilege sharing this information with you today regarding estate and gift tax giving strategies. If you have any questions regarding this or any of the other topics covered in our video, please visit my firm website at www.cummings.law. Again, not .com, but .law to schedule a telephone consultation. Thank you for your time, and I look forward to the opportunity to speak with and perhaps even work with you very soon.